What's up, everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we saw the Nasdaq 100 leading the way, and we actually saw the most selling in the Dow Jones. So the sector rotation is still going on, and we're still seeing plenty of volatility. So what does it all mean, and what should you expect to see coming into next week? So first up, we're going to take a look at the Nasdaq 100 QQQ ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, real quick, let's take a look at the bear bull survey, and we can still see that we have more bulls than we do bears and neutral people. Remember that this survey is a contrarian indicator, and we usually want to go against the majority. So right now we still see a majority of the people that are bullish, and that's also why we're seeing selling in the stock market. Typically the market goes higher when every last person is in the market and there's no money left to buy. The market then sells off and we go through a rinse and repeat cycle. Down near the bottom we'll get a lot of bears, and then the market will go back higher again. So we're going to continue to watch this survey, and this does kind of go in line with our theory that when we see more bulls than bears, we're going to see selling. That is why it's a contrarian indication. So how is that significant going into how we're analyzing the triple Qs is, don't forget, if you haven't seen my videos this week, we are expecting to see an ABC correction. So I talked about this last night, but I have reason to believe that we bottomed out in wave A and now we're bouncing into wave B, and we still have one more wave down in wave C where we should see more selling. Now, don't worry about where I put wave C. It doesn't mean we have to go that low. We'll get into more details about wave C when the time comes. But right now, I believe we're in wave B, and we still want to focus on that wave for the time being. So potentially wave B could take us all the way back up to about $324, all the way up to about $328. And we don't really care exactly how high it's going to take us right now. We just want to focus on the fact that we are indeed most likely going higher before we go lower. So these are usually bull trap bounces. And they're also bear traps as well, because there's a lot of bears that still think the market's going to go lower, and they're shorting as the market's going to go higher. Eventually they'll cover just in time for the top. They'll switch to go long just in time for the market to go lower again. That's how retail investors get tricked, and they usually get whipsawed, where they go short at the bottom just in time for it to bounce. And then when it bounces, they decide the market's going to go higher again. So they switch from shorting to going long just in time for the market to go lower again. So that's kind of the psychology behind these ABC bounces. And they are tricky, and they're going to be very volatile. So on the Stocks channel Discord, we're mostly just trading these lows and then selling these highs, and they usually are day trades because we don't really want to hold into the volatility. However, with the B wave, it's almost a swing trade. It's not so much a day trade because we're sort of swinging the low of the A and we're trying to catch near the top of the B. So if you're on the Discord server, you probably already know a lot of this, but I still want to get into more details on how this B wave is most likely going to play out. So yes, I'm bullish on the Nasdaq 100 for this bounce. And down here around this $311 level, you can see that we are holding up as support. That's a great indication that we likely bottomed in the A wave, because we're seeing a lot of buyers come in at that level, which means the market's not likely going to break beneath that support, because we've already tested that support at least 3 days in a row now. So that support is holding up, which is a great sign. And it does look like we did have a green day today, going up 0.42%, which shows us that we are likely heading back into this B wave. So I want to switch over to a 1 hour chart, and I want to show you exactly what I think is going on in this market. So I went over this last night, and I'm not going to go over it again. So if you're interested, watch last night's video. But I do think this A wave down was 5 waves down, and now I'm expecting to see 3 waves up for wave B. So wave B is going to look somewhat like an ABC to the upside, and it does look like the A wave was very short-lived because we did get into that resistance level around 319, and we did see more selling. So now that we've broken down below that resistance and we closed lower for the day, it is possible that we saw the bottom of the B wave into the close, and early next week we're going to bounce and finish out the C wave, which is ultimately the end of that B wave that I showed you on the daily chart. So I am expecting next week to still have bullish price action. I do think we're going to blast through 319 this time, and we should get somewhere around 323 and 324 before we find the next level of resistance. Whether we break through that level or whether that's going to be the top of the B wave is to be determined, and I'm not going to try to guess what's going to happen. We're simply going to watch the price action like we always do, and we're going to let the price action tell us what this market's going to do. Either way, we're going to know when that B wave is over because we're watching this very closely and we're trying to catch it by timing the price action. So there's no guessing. As long as we're bouncing up in this B wave, we're expecting to find resistance somewhere around 324 to 328. So on the 1 hour chart, I think it shows what's going on a lot better, and it also shows you how we're going up in the 3 waves to finish out wave B. Again, if none of this is making sense, just watch last night's video because I went into this in great detail, and I really think it can benefit you to understand what I'm talking about. All right, so hopefully that helps you understand what's going on in this volatile market. So with that being said, let's go ahead and analyze this chart and try to figure out what's going on going into next week. So we can see the price action did close very close to that 314 support level, and we continue to find closing prices above this support level right around $312. We are wicking lower on the daily chart, and we are testing that 311 level. So that level is also very important, and if you're trading this market, you want to pay attention to that level as well. If we do break down below 311, it is very likely that we're going to test the support level around 308. So don't forget, we're not out of the woods yet, and this B wave could be short-lived, and it is even possible that we double top around 319 and then come back down to 308 or possibly even lower around 297. So I want you to remain disciplined, and I want you to be open to any possibilities in this market. It's more than likely going to bounce and then go lower, so that is the scenario that I'm favoring right now. It doesn't mean it has to happen the way I'm explaining it, but that is the highest probability that I can see in this market. So as far as resistance levels above, watch this 319 level because it has been very critical, and you can also see that it's right at the 50 EMA, which is acting as resistance. If we break above 319, I want you to watch 324, and then above there, it's going to be 326 and 327. So those are your critical support and resistance levels on the triple Qs. And remember, if you're trading this market, don't be greedy. Get in and out and take your profits and be happy with what the market gives you. Don't get too greedy because you're going to get caught holding a position that will become a losing position. If you're a long-term investor and holder, just let this correction play out and use it as an opportunity to buy lower and then hold through long periods of time, and you're going to do well in the long term. Next up is the S&P 500 Spy ETF, and we saw Spy going down negative 0.52% today, and we did find support and hold up above that 50 EMA. You can see that we started getting into this gap, which is now shrinking a little bit, but we still haven't quite closed it, which is going to close down around 377. So it is possible Spy is very close to closing the gap at 377, and that's also the strong support level that I wanted you to pay attention to. So as long as Spy is holding up above 377 and this 50 EMA, which is right around 379, I'm still bullish on this market. We haven't really seen any technical breakdowns other than the tech correction, which now seems to be ending, and we possibly could be getting some relief. Now, as we've already talked about, after that relief rally, we could go lower, so I'm strictly talking in the short term. Medium term, we probably do need to look at lower prices, but short term, I think we're due for a relief rally, and we're likely going to see the S&P 500 bouncing with the tech sector. So if we do close the gap and continue to go lower, there is another support level I want you to watch at 374. Below that, we get back into these trendline support levels, which are going to be all the way down here into the 360s and the high 350s. We'll talk about those levels if we need to, but right now, watch these levels above at 377 and 374. Resistance is going to be above at 384, the 20 simple moving average at 386, and then this level up here at 389. Remember that there's a lot of tech in the S&P 500, so if the tech sector continues to go higher, we're likely going to see the S&P 500 go higher as well. In the Dow Jones, we saw the most selling today, going down negative 1.44%, which shows us that the sector rotation is getting even more volatile because during the tech correction, we were actually seeing money flow into the Dow. The Dow hit an all-time high 2 days ago, and we did find resistance right around that 319 level. Ever since then, you could tell from the candles in the price action that we've seen heavy selling, but we're still holding up above a positive sloping 50 EMA. So watch the 50 EMA at 308 because that should be a strong support level. If that level does break down, it's possible we come all the way back down to the 300s, which is also a very strong support level. It could be that money is now leaving the Dow to get back into the tech sector because it was so beaten up and ready for a bounce. So don't expect this market to be easy because it's going to remain volatile and it's going to catch you off guard. So you need to be disciplined right now, and you need to be focusing on strong support levels. And if you're trading, don't be afraid to lock in those profits on those bounces. On the ARKK ETF, we also went up, going up 0.66% today, but that wasn't without volatility. At one point, we were down all the way around 126, and we do have support right around 124. If we break down below 124, there is a gap close support right around 117. So on ARKK, it's also possible we're going through that ABC correction, and it's possible we're going through that B wave bounce, and we're going to see higher prices on ARKK going into next week. Don't forget that that's possibly a bull trap, and there could still be more downside to come after that, which could close this gap down here at 117. Resistance above is going to be the 50 EMA at 137, and then there's another strong resistance level above that at 142. On the VIX, we see fear leaving the market, going down negative 3.25%, which is a good sign because the VIX actually went down on a day the S&P 500 went down. Normally, when the S&P 500 goes down, that means the VIX should have went higher. So that is a bullish divergence, which actually favors the S&P 500 to go higher next week. If we see the VIX continue to go lower, that means fear is leaving the market and the market is likely to drift higher. So pay attention to support on the VIX right around 26 and down here around 25. If the VIX bounces off those levels and goes higher, we're likely going to see more volatility and more corrections in this market. On the US dollar, we're getting a strong bounce today and we're blasting through resistance levels. Right now, we just need to pay attention to resistance at 91, and if we start breaking above that and closing above that level, it could mean that the dollar did bottom and it's ready to go higher. I was favoring the dollar to come back down and test 89, but this could be a truncated wave and we could be bouncing from here and going back into a bull trend. So we need to watch the dollar very closely because it could be telling us a very important story about what's to come in the market. On gold, we see somewhat of a capitulation with the dollar spiking. We see a huge sell-off in gold going down negative 2%. At this point, gold is probably due for a dead cat bounce in the near future, but don't forget that it's in a strong bear trend and we don't want to get overly bullish on something that's in a strong bear trend. So right now, look for gold to eventually get a dead cat bounce and retest these levels around the 1760s. If you're buying gold at these levels and you're trading it, don't be afraid to sell at these resistance levels because it can still go much lower. On silver, we see the bull trend is starting to reverse to a bear trend, but we are still sitting on support right around 2650. We're holding up above the positive sloping 50 EMA, but the market is likely to get a lot more volatile and start chopping around at these levels. If we bounce off support, look for the price target above to be right around 2750. On Bitcoin, it also looks like we're kind of going down in this ABC here, and it does look like Bitcoin is wanting to test that 50 EMA, which is right around $41,700. So look for Bitcoin to possibly continue its selling until it finds support around that 50 EMA. Once Bitcoin completes its correction cycle, it could go back into a bull market and we could go back up to these price targets around 55,000 and 62,000. Don't get overly bullish on Bitcoin until we see a confirmation of the bounce off of that support level. On Amazon, we went up 1.17% today and we're currently holding back above that support level at 30.90. Look for Amazon to try to bounce off this level and potentially try to break back into this consolidation wedge. There should be resistance above around 31.80 and 32.20. On Tesla, we went down about negative 1% today, and it does look like Tesla wants to come back and retest the support level around $618. On Tesla, be very careful because it did go very high and it needs a lot of time to cool off. It's very likely we see Tesla going into a correction and a bear market for many weeks to come. So don't get overly bullish on Tesla until we see a confirmation bounce off support and we form a new daily higher high. Right now, we're in a downtrend, so protect yourself and watch that support level very closely at 618. Resistance is going to be above right around $700 and the 50 EMA around 748. On Apple, we went up 0.22% today, but we were much higher intraday. We did see massive selling into the close, but we're still holding up above support, which is right around $121. As you can tell from Apple, it's looking very oversold and it does look like it's due for a bounce soon. That would go hand in hand with our theory that the triple Qs is going into a B-wave bounce because Apple is the biggest holding in QQQ. So if Apple starts bouncing from here off of these support levels, that will add a lot of strength to the tech sector and we could see the triple Qs hitting those price targets that I gave around 325. Watch resistance on Apple above at 124 and 126. Support levels below are at 121 and way down here at 114 if that level does break down. On the financial sector, we're still in a bull trend, but we are seeing the price action cooling off and we're currently trading right on top of the 13 EMA. On the industrial sector, we see the same exact story as financials, still in a bull trend and finding support currently at the 13 EMA. On energy, we're still in a bull trend. We found support intraday at the 13 EMA and we tried to close higher for the day. You can see these sectors are still looking bullish, but they are the sectors that are now seeing the most selling as we see money trying to rotate back into the tech sector. On healthcare, we're still looking bearish, closing below that 50 EMA and still developing bearish trending. So going back to the S&P 500, I want to remind you to remain disciplined in this volatile market. If you're trading, you need to get in and out quickly. And if you're not sure how to trade this market, just walk away and let the volatility and let the correction play out and come back to trading after the market is less volatile. This is a very tricky time if you're a rookie investor, and I would much rather see you sit in cash and not making any money than trying to trade and losing your money. So if you're adamant about trading this market and you need help, come check out the Stocks Channel Discord. We're doing very well catching the support levels and selling at the resistance levels, and that's the key to trading this market. You can find out how to join the Discord server by clicking on the link in the description of this video. So next up, let's take a quick look at our hot stock, which is Lockheed Martin. And we saw Lockheed Martin getting stuck in the volatile day, getting sold off, going down negative 3.35% today. We did hit all of our price targets on Lockheed except the last one at 357, which is going to be a lot longer of a hold if you're trying to get to that level. Right now, Lockheed Martin is looking bearish, getting back below 333, so I would back off of this stock unless it can get back above this 333 level. So this is actually a very good point about in this volatile market how you want to lock in your profits. We were buying Lockheed initially down around 333, and we were blasting through price targets, and we were locking in profits. If you don't lock in profits and you're getting greedy in a volatile market, you can see how quickly the market can turn those profits into losses in only a matter of days. So be disciplined in locking those profits, because even on strong stocks like Lockheed Martin, we're seeing plenty of selling when the market picks up in its volatility. So thanks for watching, everybody. Have a great weekend, and I hope you're crushing this market. And as always, I will see you in the next episode.